What's up, everybody? So in this video, I'm just going to be covering how I personally find the draw on liquidity in the market, or places to target within the market. So this can be explained in a whole lot of different ways, and you will always see somebody having a different draw on liquidity than you, or a different way of finding it. The way that I find the draw on liquidity in the market is essentially using all of the confluences and the concepts that I have taught within this course. I essentially bunch them together and I see the respect and the disrespect of the certain ones. So essentially what I'm looking for in the market when I'm looking for my draw on liquidity is I'm looking to see what has been respected within the market, what is being disrespected. So for example, in a chart like this right here, let's say we're looking at price just where it's at. Right now, I can see that price is inside of this bullish 1 hour fair value gap right here. So if I were to go onto the lower time frame, right, and I can clearly see that we are respecting this bullish fair value gap right here. If I went onto the lower time frame, I want to see what is getting disrespected right here, right? So when we returned into this 1 hour fair value gap right here, if you could see right here, we formed this bearish 15-minute fair value gap right here, and we inverted that. We closed above that fair value gap and turned it into an inverse fair value gap. So right there, that's already a case of us respecting bullish order flow and disrespecting bearish order flow. So that can be an example of, if we invalidate this 15-minute fair value gap, I can expect price to possibly draw up to this high, or up to this draw on liquidity. So that can be scaling from a higher time frame down into a lower time frame. And we can clearly see after we invalidated that fair value gap, we had a little bit of a pullback, and then we retraced up into this high. So that's a clear example of just the respect and disrespect of certain PD arrays. And if we were to go onto the hourly time frame, we can honestly expect price is most likely going to draw up until this high right here, just because we are respecting bullish order flow right here. We're respecting this breaker block right here, this entire area. We're respecting this breaker, we're respecting this fair value gap, so it makes sense for price to draw up towards this high. So like I said, when I'm looking for the draw on liquidity in the market, I'm looking to see what is being respected, what's being disrespected, and how can I use it to my advantage. So once again, like in a situation like this, if I were to go into replay mode, if I see in a situation like right here, price at this time wasn't really respecting this bullish fair value gap. We had a little bit of a rejection from it, but we're coming right back inside of it. So if I was looking at the market from this standpoint, I would expect, okay, if we disrespect this 1 hour fair value gap, I can expect us to possibly come for lower prices, or to maybe, target this low down here, or maybe even this low down here, maybe even this low. Either one, doesn't matter. I'm not looking to aim that far. I'm not looking to predict that far. What I'm trying to just see is currently in the moment what is being respected, what is being disrespected. So in a situation like this, I would probably have a little bit of a neutral bias, more on the bullish side, just because we were inside of a bullish fair value gap. We're inside of a bullish breaker block right here. So I can expect more likely than not a push to the upside. So that's when I can, like I said, possibly go into maybe the 15-minute time frame, maybe look for some other confluences within my trading, and maybe I can see if we can maybe frame a trade even right here. So right here, like I said, we have that bearish 15-minute fair value gap right here. We're still inside of this 1 hour bullish fair value gap. So on the 15-minute, we could say, okay, if this 15-minute fair value gap gets invalidated right here, I can expect price to run to this high, at least, right? Because this is the high that formed that fair value gap. If we're invalidating the fair value gap, we're probably going to come to the high, right? So can wait. Okay, so we invalidated that fair value gap now. So now maybe I can go into a little bit of a lower time frame, maybe see what's going on. So many lines. Let me get rid of these. We know that we're inside of this, also this 1 hour breaker right here. So let's see. Maybe if we can see if we get some respect off of this little 1 minute fair value gap right there, maybe. Okay, we rejected right off of it. Maybe if we can close above this fair value gap, maybe you could go long, maybe enter a long position, see what goes on, boom, slap it on there, target up to this high. buy up in there. Consolidation, consolidation, consolidation. Really does a whole lot of nothing for a while. And then boom, you finally hit your take profit. Boom, stop loss never hit, just consolidated, and then it finally hits your target. So that's an example of how you can find the draw on liquidity, scaling from a higher time frame down to a lower time frame. It's not going to be the same every single day. I wouldn't even say that there is a mechanical way to frame a draw on liquidity, because you're kind of just taking what the market is giving you, taking what you see actively in time. Because like I said, I could have aimed for these lows down here or whatever if this 1 hour fair value gap got invalidated, but you have to realize that is a lot for price to move. And if I'm on a lower time frame, you're not going to necessarily be catching that, whole move most of the time. So for on a lower time frame, maybe we could have targeted this 1 hour fair value gap, or either of these one hour lows right here. So you don't want to shoot for the stars. You just kind of want to take your piece of the pie and just leave. Better instead of overshooting for something and it never getting hit. So, like I said, draw on liquidity, it's not going to be the same every single day, but I would say the basis of it is to just see what is getting respected, what's getting disrespected, and scaling from a higher time frame into a lower time frame. That higher time frame is kind of going to give you the narrative, I would say, or the reasoning for price to head in a certain direction. So once you have this higher time frame PD array or this higher time frame confluence, that's when, like I said, you can start scaling into these lower time frames and looking for possibly an entry model or something to fit the draw on liquidity that you think price is going to go to. So yep, very simple. Just the respect and the disrespect of PD arrays. You will honestly, this becomes kind of a natural thing after a while. You kind of start to be able to just see naturally what is getting respected, what's getting disrespected, and you have an idea of, where the market's heading, where it looks like we want to target, and all of that stuff. Because in a situation like this, where this 1 hour for value gap is getting held, we're getting displacement to the upside, it's very obvious to me that it looks like price wants to come up to this high, or at the very least, these highs right here. So, very simple. You'll learn it over time, and like I said, it's just the respect and the disrespect of all of the confluences that we use. Never going to be the same every day. So I hope that helped.